Welcome to Coffee Talk, brought to you by Hyatt Commercial.
I'm your host, Justin Mullen, where industry executives talk leadership, culture, and commercial real estate. Grab your coffee and let's talk business.
Adam Borcz, welcome to Coffee Talk at Hyatt Commercial. Appreciate you coming in. There's a lot of ways that I could introduce you today. I will start with a good friend first and foremost. First of all, let me apologize for my voice. Interested to hear how this sounds on the podcast today, but I think I may have had a little bit longer weekend than I anticipated. Woke up yesterday after the 4th of July with a little bit of a dry voice here. But back to the point of being here. So Adam Borcz is with us today, investor, operator, entrepreneur. Again, could use any of those to introduce you, but let me kick it back to you and just start with, at this point in your career, how would you describe your role? What's your title nowadays?
Probably owner-operator is most accurate. In the financial world, people use terms such as independent sponsor, self-funded searcher, but I think owner-operator is probably the most applicable. I got into the current position of owning businesses through a fairly well-known acquisition model called entrepreneurship through acquisition, which is basically people who either get funding from investors, go look for a business on their own, have banking relationships, acquire one business, operate until you sell it. I did that, but I came in with no investors, no backing, quit my job, went hunting, found a business, and then, my father's a minority owner in one of the businesses, but I'm the majority owner, and I can keep the business for as long as I want.
And so really you just dove in head first. We'll come back to your bio here in a minute, which is definitely going to be interesting for our listeners to hear. But at the end of the day, you operate a company on a daily basis and then have your tentacles into a variety of different things on top of that.
Yeah, I would say that this is how, when I talk to other small, medium business owners or people who want to buy SMBs, my advice going in is I'm into all the financial details. I know where every single dollar in and out of the business, but in general, I don't work in the company. I run the business. Yeah. And I think that distinguishing description is really important from what you can get out of this model.
Yeah. And I think just knowing, again, your history of how you got into it, that's probably something that you learned through your experience of evaluating businesses when you're buying them and evaluating their leadership structure, et cetera. And then looking at financials and trying to understand where you can clean things up, where you can tighten things up. And really, Adam and I have known each other pretty much our entire lives. Grew up playing sports in and around the same communities. My brother and him grew up playing sports together. And then really our professional career really connected in 2015, 16, 17, when you were working for another business, but also looking at some side opportunities. Right. And we don't need to go into the details of what we looked at, but one of the things that really impressed me with your expertise at that time was, your financial knowledge and your ability to really audit, a company's financial statements and start to evaluate, some things that, hey, this doesn't make sense, or hey, this is in the right direction, but we can tighten it up. Before we get into that history though, one of the things that I want to get right out there, because we're just coming out of a difficult, I won't say difficult, but a challenging 6 to 8 months process of renewing your primary lease for your primary business. Mm-hmm. The Coffee Talk is not really intended to be targeted specifically at commercial real estate. It's really meant to talk to other business owners and talk leadership and strategy and learn more about your industry. But in this case, given the last few months and that we have now successfully renewed your lease, of course, I think there's still some lingering things out there that we're going to evaluate.
Yeah.
But talk us through that process. Give us your insights on the commercial real estate leasing process and how impactful that was on your business, certainly while you were going through it and looking forward. And don't be afraid to beat us up a little bit as service providers if you have to.
I mean, I have a B2B services business. So we sell furniture installation services to another company that then sells the product and the installation to the end user. So we're a B2B service provider. We receive all the end user product in our warehouse. We've had as much as 150,000 square feet. And until you get into a lease negotiation, unfortunately, the warehouse is the least important, most important thing I have. Because if I don't have a warehouse, I don't have a business. If I don't have a warehouse, my customer and our end users don't have a business.
And storing that product
Right.
is a big component of it.
It is. Not that from a revenue generation standpoint, the product does not generate a significant amount of revenue because it typically comes in and turns around in 60 days to go back out to be installed, physically put together. These are systems, furniture, cubicles for people who don't know what we're talking about. But I mean, there are tens, double-digit millions of dollars of product moving through our warehouse on a rolling 30 to 60-day period, and you take it for granted. And when I acquired this business, which at the time had been around for, over 30 years, we had very good terms, very good price. I would say we have one of, if not the best landlord in the area working with us as a partner. We renewed, it was a year before COVID, and I didn't really give it a lot of thought. We negotiated a great lease and we operated the business. We'll get into the COVID dynamics. And then 5 years later, you're looking at the run up in the industrial market, and maybe it needed a red herring event like COVID to level set maybe previous 5, 10, 15 years of prices being suppressed. But that's what capital markets do, right?
Yeah. And the interesting thing too is you got a little bit of a double whammy in that process. In one side, and we'll come back to, you install office furniture, and we'll come back to what COVID did to the office as a use. And then on the other side of it, as we came up to this most recent renewal, the industrial world had doubled in value.
That's right.
And rents tracked that accordingly. So in 2019, when we did that first renewal,
right,
as you as an owner, we had, again, to your point, a great landlord who was eager to keep you there and keep you happy. And we did a great deal, and you benefited from that for 5, 6 years. But it was a different landscape this time around.
Yeah. And prices, when we got to the right side of COVID and realized that, hey, when we got to 2020, end of 24, beginning of 25, when we were going to renew and renegotiate a new long-term lease, we knew this was coming. And the conversation was around, how do I keep my per month cost the same? If not, it goes up a little bit. And the only way to do that, if you think about you're multiplying a per square foot price times a total square footage, if the per price goes up, let's just say 2 times, which it directionally did, you have to reduce the multiplier. So I pushed my team into a smaller footprint, is the net of the conversation. Instead of having 150,000 square feet, we pushed it into 130, and now we're actually down closer to 100. But, you own businesses that are 30, 35, 40 years old who are historically profitable, good mature markets, growth opportunities, fairly resilient to macroeconomic conditions. There's always low-hanging operating efficiencies. And I found that pushing the team in a direction from a utilization of space perspective, people were like, yeah, we can put up more racks, we can be more efficient. And we ended up taking about a third less space, and we'll be able to generate the same amount of revenue.
Which was a good result in the end. But getting through the process, again, I don't know if painful is the right way to describe it.
That's a good adjective.
But I'd be interested to get your take on, again, one, in the industrial world and warehouses, you've got your horizontal footprint, but for you is really critical on your vertical footprint too, meaning racking and how much, shrink down. And one of the hurdles that we encountered and frustrated the heck out of you was this update of a sprinkler system.
Right.
And for somebody that's a very big picture thinker, getting beat up and hung up on a sprinkler system became a very sticky point for you. And so just talk through the pain of the process, or what part of the process was handled well. And again, don't be afraid to criticize us a little bit if you have to, but I hope we did a great job for you.
Yeah, I think that the starting point, the end of 2024 was the starting point of the frustration was, what's the economic impact? Like, I just assumed, because we have such a large facility, that you're looking at, this is a 7-figure capital expense. And when it was all said and done, it ended up being a lot less money for me, looking at a couple $100,000, which is really important to the landlord. They've got dozens of versions of me where they're in buildings, they have to do it. So overall, it's a large expense for them. But in isolation, being one of, if not the largest customer, I felt like the focal point of that initially with a $10, $12 million lease became a little unreasonable.
Right.
So that was the first part. And then the second thing was just the communication of, do we want a 5-year? Do we want a 10-year? And ultimately it came down to price. And I was expecting a higher price, which we ultimately got. but I was also expecting a certain level of communication about how we were going to get there. And we were talking before, and we'll get into like my leadership style. Like, I'm a very direct communicator, and I expect my partners, my vendors, to communicate directly with me. And when they don't, it drives me crazy, because that creates frustration, anxiety, inefficiency, and time is the thing that I don't have unlimited of. So when you start to waste time, it wasn't even the dollars. The dollars were going to be what they were. And we agreed on what that was going to look like, and it was going to work for the business. Smaller space, higher per square foot cost, but the communication of what was the term and how we got to the price and the sprinkler, like everything holistically, it was just communicated, I think, inefficiently.
Well, and I think one of the challenges in our business, meaning the leasing side of commercial real estate, as a broker, right? We're always a third party service provider.
Sure.
And so we're trying to, deliver the appropriate message and give you the advice that we can give. But as a business owner, I also recognize the frustration of like, no, let's get belly to belly and just hash this thing out.
Yeah.
And I'm sure that there was times that you felt like you never really had the other side of the transaction, the principle right there in the discussion. And I know that could be frustrating.
Get into one advantage and one disadvantage. The advantage of having a partner like Hyatt negotiating on my behalf is you guys can get into like the prices, the escalators, the term, all the T's and C's, even in like a term sheet, and ultimately the lease. And trust me, I'm reading every single one of those, but you're negotiating that. I can then go in parallel with you to my contact, which in this case, it's not the principal and it just never will be. So that's a disadvantage. But what I do get with my contact with our landlord is I can then rip the Band-Aid off, and I can level set sometimes very aggressively with them and tell them when I'm not happy. And that's not your role to do that. That's my role to do that. So when you attack the negotiation from the broker, manage the relationship, manage the T's and C's, manage like the really important nuts and bolts of the lease, I can take the emotional side because I'm the owner. And is it posturing? Sometimes it is. Sometimes it's real emotion. Sometimes it's, I want to get my point across and then see how they come back to you with the negotiation. But there's value in that kind of double tag team approach.
And one of the things that I love about working with you is knowing that you are going to be very direct with us. I always tell people, people claim our business is cutthroat and it's challenging. And I always say, no. What most people outside of the industry don't understand is like, it's not my competitor that might get me one time or another, or might not get the term we needed on a deal. But when my client isn't straightforward with us, which happens not frequently, and the longer you're in the business, the quicker you can recognize that in somebody. But what I love about working with you is the direct approach. And you're going to say, hey, this is what I need you to do, and here's what I'm going to do on the other side of it. And so with all of that, thanks for being a client. We really appreciate it. It worked out well in the end. I think we've got hopefully many years to go of working on different deals together. And I don't know that we need to belabor that point too much right now because it did end up successfully. I'm glad to see the business continue to grow in that location. With that being said, now let's come back to a little bit more of the kind of focus on leadership and your business growth and all that. But let's start from the beginning. Give us your background professionally, personally, what you think is relevant to the discussion today.
It's nice to own businesses in the state you grew up in, and now in the county I grew up. Baltimore for high school, but Naval Academy for college, submarine officer, and then did my 5 years and got out and been in the private sector since 2008. I really wanted to stay in the area. I was working at the Pentagon. I landed a job with a publicly traded energy company that just happened to be run by a Naval Academy person that I had a relationship with. My brother and my uncle are also graduates. Everybody thinks my father went to the Naval Academy because he knows everything about it and he knows a lot of people there, but he actually, Justin would say, unfortunately, went to Maryland like his father. But I'm cut from the cloth of my father. He's an entrepreneur. He's been an owner in a digital marketing firm, but used to be like old school print advertising in the 60s and 70s in DC, primarily in residential real estate. He was always the one going into work, but always coming home every night and having the flexibility to coach us in lacrosse. We took great vacations as kids. And just from like, how do you treat people and how do you be a good business person? He was the creative and the relationship part of the business. He was not the financial side of the business. He had a different partner doing that. So I get that part of the entrepreneurship from my father. I get the attention to detail and the directives from my mother, who taught in Anne Arundel County Public Schools for 40 years. So I think that the two things have combined to, one, when I got out of the Navy, took the publicly traded job, I basically worked for a guy who was 10 years older than me doing what I wanted to do and needed to learn how to look at businesses, evaluate business and run businesses. But I kind of knew that because of my father and the way that I was, on my mother's side, being on my own and being autonomous and owning a business is in my DNA, and I'm cut from that cloth. So it took me 18 years after college to do that. I was 38, going on 39, and I'm on year 7, acquired 2 businesses, actively trying to acquire more. And it just feels, 25% of the time I have anxiety and I'm frustrated and I'm pissed off at people. But 75% of the time I'm high-fiving my wife because we're making money. I've got an incredible quality of life. As you know, I get to do as much or as little as I want every single day. And I get to get involved in the things that I, A, enjoy, and B, can add value to for the businesses.
Yeah. And again, it just happens that you're our second guest in a row who's a Naval Academy graduate, grew up in a big industry and then got into entrepreneurship. But I would say yours is even further divergent from the traditional Naval Academy graduate role, meaning our previous guest grew up in the energy industry as well, and is now running a quasi startup in the alternative energy industry, which is super highly regulated. Obviously, for you though, you're really in a probably very low regulated. If
it's not
if any.
regulated.
Yeah. And I'm interested to understand, how did you go from that background and then living through the private equity kind of turnaround style business, which I know was very stress and high risk and high reward if you succeed there, to a more, I don't know if bread and butter, but a kind of classic small to mid-sized business providing a B2B service.
Yeah.
How did you get to that role? I mean, what is it about that business that attracted your attention?
It's interesting. If you look at distressed businesses versus profitable businesses, the qualities of the business that you want are not very different. You want as much sticky, like they call it sticky revenue, as possible. Although I don't have recurring revenue under contracts, we have repeat revenue with customers that we've been doing business with for 40 years. You want sticky revenue. You really want companies that have moats around them so that nobody can get across and storm the castle.
Yeah.
And when you look at furniture installation, which I had no desire and no ambition to get into that industry, but I wanted to buy a B2B service business that had a moat, that had something special about it. And if you read the MBA books, they call it a high barrier to entry. That's what a moat is. So you want that. And then thirdly, and there's one more after this, thirdly, you want people who work in the business that when the business transacts, stay in the business. So not the owner, not the seller, other senior middle-level management. You need senior middle-level management who manage the projects, know the industry, have relations with the customers, understand the workforce. So you got to have good people. And then the last thing, maybe it's the most important, but I chose to put it forth, is it has to have a good financial profile. And that means that
big enough to make it worthwhile.
That's right. So you have to have a certain amount of people, you have to have a certain amount of revenue, you have to have a certain margin profile. My very back of the napkin advice to SMB aspirational acquirers is no less than 25 people, no less than 5 million in revenue. And if you buy a services business, they don't sell products, they sell services. They're a labor company. Try to keep the gross profit margin profile above 30% and the net margin profile, the operating margin profile above 10%. Those are just guidelines, because if you don't have that, it just becomes very difficult to transact with a small company, even a company that's got 2 million in revenue and has 80% margins. It's just, that's how I think about it.
Yeah.
So those are the 4 things.
It's interesting because when you say moat, we actually look at investing in real estate in a similar way. Right now, our kind of investment thesis is single story product of any asset type, meaning retail, office, industrial, flex, single story, because there may be greater density that could be achieved long-term going vertical.
Got it.
And it also typically limits your risk to expense exposure, meaning in single story, like your building is a triple net lease, right?
Right.
So if the taxes go up, the tenant pays the tax.
For me,
A vertical building, if the taxes go up, it's a lot of times baked into the lease, or a new lease it gets baked into. So you've got some exposure there. Same with common area maintenance. The more vertical you go, the more common area, et cetera. But the moat part comes into play in real estate when we look at we also want those properties to be in a high barrier to entry location, somewhere that development is challenging.
Yeah.
Which in Maryland, that means everywhere.
Right.
Effectively. You know, there's not an easy place to develop anything in Maryland.
No.
And then, and this is probably not as complicated as some of the distressed businesses that you guys are buying in your previous role, but we like to see 15 to 40% vacancy, which is where that value creation can occur. For every dollar that we just like in a business, every dollar generated in rental income is effectively going straight to your bottom line and cash flow, which then becomes some cap rate increased value above that.
And I would be lying to myself if I said that I knew every single thing I just described the day I closed my business, because I didn't. But what I did know, if from evaluating, then getting involved in the transactions, and ultimately being involved in running the distressed businesses, I think that the fundamentals are really very similar. And it put me in a good position, candidly, from a confidence perspective, going and looking, I was like, this is a lot easier. The way that I was taught, we would look at balance sheets. There was no profitability. There was no EBITDA, there's no earnings. It didn't matter.
And you're probably looking at major cuts to staff.
Totally.
Yeah.
And now the balance sheets are really simple. Unless you look at, it doesn't matter, you know, what really is on there, because they're cash free, debt free. You're really looking at income statements and P&Ls, because profitable businesses trade on multiples of EBITDA. So the purchase price and the terms of the capital structures that you get into play a very big role. But I think that those four things have become the bread and butter of SMBs. And you can look at any ETA book or any buy and build or all the books on entrepreneurship, like it's pretty consistent across the board. The other benefit of approaching businesses from those perspectives is that's how banks really look at the businesses as well. And there's not a lot of people, no matter what your personal financial situation is, who isn't going to go out and get a loan.
Right.
And whether you're going out and getting an SBA loan from a commercial lender, you're getting a commercial loan from a commercial lender, they're going to look at those four things too.
All right. So now let's go back. It's 2019. We've just renewed your lease. The world all of a sudden falls.
We had a
off the
great
cliff.
celebration dinner.
Yes, we did.
And then 6 months later,
we're both of us, I think we're in the midst of having kids or just had some young kids. And then March of 2020 hits and the world gets flipped upside down. Yeah, certainly the office business in and of itself is substantially and permanently changed.
Yep.
Talk us through the kind of COVID days and what that experience was like, and then what is the legacy of that moving forward?
Yeah, the first thing that I would say is I am a planner. So I brought there's two businesses at the time. We actually had a small product part of Delta, originally called Omega, which doesn't exist anymore. But I brought the two senior leadership in, and I said, and I asked I asked a rhetorical question. I says, when did Noah build the ark? And one guy looked at me and he goes, before the flood. And I go, exactly. So we started to plan out all of the negative implications for COVID the week they announced that. Now, conveniently, when they said all these businesses have to shut down because of COVID, we were part of the critical infrastructure. Right. Now, back to the moat, back to these businesses, like I'm not so sure that my businesses would have survived like they would had we been in a purely commercial market, but because the disproportionate amount of our end users are in the federal government and they happen to be in the intelligence community, you still got to put a butt in that seat. Our business, and I on my computer so I could go back to some of the older financials, our business actually grew almost 10% the first year of COVID, because every single government facility that had to stay open asked us, through our customers, which are the dealerships, to go in and what we would call reconfigure, put them 6 feet apart, add protective screens. And our business surged. That was across government contractors. That was across end user federal government. And we had the best year in 2020 than the business had in the last 10. Now, 2021 was a different story. All of those reconfigurations were done. A lot of the commercial market was slowed. The federal government was, like I said, all that reconfiguration work had happened. So we had a pretty hard 2020. We had, I would say, like a break-even year. And then as we got to 24 months to the right of COVID, 2022, the business grew. 2023, the business grew. And 2023 is actually the best year the company's ever had in 37 years. Better than 2020, and then better than any previous year. And 2011 was the biggest year prior to me buying it. I bought it in 2019. And we weren't that much higher in revenue, but I've almost tripled earnings that year from the acquisition earning number. And that was probably a backlog of work that didn't happen during COVID, but we also acquired new end user, a little company called Amazon. and we were involved in installing one of the new towers in Northern Virginia.
Right,
And
the HQ2.
correct. So
Right.
we did one of the towers at HQ2. We're doing a lot of their ancillary sites. And even to this day, 3 years later, they've continued to be a very good partner for us, commercial side.
And what is now the legacy in your mind of the COVID, for the rewind 2 and 3 years ago, and everything was work from home. In order to recruit new employees, you got to have a great work from home policy and flexibility and all that. And now it's probably 12 to 18 months we've been hearing stories, and it seems to be picking up steam, but not at the pace that some of us would like to see. But now everybody's talking about bringing employees back. We've always, by the nature of our business, the brokerage side of our business, our people have always worked on the street. We don't, we've got office hours, but everybody comes and goes as needed. But when I talk to small business owners, it's like, some can figure it out how to work from home. Most of the time, those are really small and have a long track record of doing it the same way over and over. Or it's a big corporate world that thinks that they have to cater to a work from home policy. But everybody in the middle seems to be really focused on getting their people back. What are you seeing right now?
I felt like because of Amazon in 23, the work from home thing didn't affect us because most of our business is not commercial work. It's federal government, it's intelligence community. The work from home dynamic doesn't really exist. The government contractor, there's a piece of that affected that. But with Amazon coming on so strong, like none of the work from home things affected. 24, I actually felt the work from home dynamic hurt us a little bit more because we had built new relationships with some dealerships who were more in the commercial, non-government contractor space. And it was a little bit flat. It's turning pretty quickly. I mean, we're seeing, as long as the big Fortune 500 publicly traded companies are pushing work from home, all of the middle companies that used to buy furniture and used to use this as an installer, if they don't exist, like that's not the major part of our business. It really is the state governments, the federal governments, the Northrop Grummans, the Lockheed Martins, the Amazons, the Capital One banks.
A lot of the rest of the business world takes their lead from those kinds of companies.
They do. And there are end users via my dealership customers that ultimately, I'll just give you an example. There are certain law firms that we would install, and after COVID, they're like, we just don't need an office anymore, guys. And it went away. But I think like overall, I am very bullish on, even with work from home dynamics existing, there's a reason why my biggest customer has been around since 1900.
Yeah.
It is incredibly resilient no matter what happens. And if you look at they went through the Great Depression, World War I, the Great Depression, World War II, everything in the Cold War, the first Gulf War, 9/11, 08, 09, and now COVID, and they're still they've grown the entire time. I just think that there are sound bites that people can use to say that, well, because this happens, you can't do this. I'm like, build an office building or take it down. Furniture work has to get done.
Yeah.
We do knockdowns, we do reconfigurations. Now look, like the big Amazon new capital products, those are always going to be the biggest.
Yeah.
But those don't have to happen every year. They only happen every 5 to 10 years. So back to the moat, I didn't know it as much as, in 2018 and 19 when I was evaluating Delta. That's why I bought a second business last year. And that's why I'm going to buy a third business in the second half of this year, because I just think no matter what happens, these businesses are going to be around. Because human beings are going to sit in chairs.
Wow. No surprise, you're not coming up with excuses for why your business isn't growing, because you're growing it like crazy and that's who you are. Let's dive in a little deeper on that side of it. I would say, do you have a leadership style? Not the question that I'll get to in a minute, but have you implemented any kind of structural, operational excellence leadership style? I mean, there's EOS or Gazelle or old school Six Sigma or anything like that. Do you have any kind of specific process that you this is how we do it? Or is it just the Adam Borcz way and you just do it the way that is going to work?
It really falls into the second bucket. I think that everything for me and for the businesses and for the company, everything is focused on gross profit. And that's all I talk about. And obviously gross profit is a direct result of revenue minus cost of goods. Our largest cost of goods are people. Warehouse goes into overhead. So it's gross profit. And we align our budget and our incentive plans around gross profit. So that really becomes the focal point of the company. what are the pillars to executing on that gross profit? I let the company run the way that it's always run. But at the same time, I am laser focused on, as a percentage of revenue, how much we spend on labor.
And if I had to guess, you probably are substantially more effective at holding your people accountable than maybe your previous owners were.
So back to the thinking about the leadership style, that is exactly how I describe myself. There are businesses who have owner operators they foster environments of loyalty. And I'm a loyal person, but more like macro leadership as an owner of the companies, I'm a leader of accountability. I like accountability because it doesn't lie. Like, you want to work from home every day? Great. I'm going to know if you're not doing your job. You said that this is a really profitable job. Let's look at the numbers. And the nice thing about gross profit, and this is, I'll use a little Navy cliche, gross profit gets everybody rowing the oar proverbially in the same direction, the same speed. Because if you're rowing it in the same direction, not the same speed, you go in a circle. So gross profit, everybody can see, they can feel it. And because everybody's involved with either pricing, invoicing, and the execution part, the core project managers and those teams, people know what 30% means. They know what 40% means. The financial gross profit is less important than what they really look at as labor margin. How many dollars do we spend to do the job? Mm-hmm. And we try to stay no greater than a certain amount. And if that happens, then my gross profit, because there's other things that go into the gross profit besides the people, but we stay laser focused on that because it's transparent, it's easy to understand, and execution with something that's simple and easy to understand is a lot easier than, candidly, like, I've never been into the other things because I don't have the patience to like implement it and figure out like, okay, we have these processes and this stuff, but everything comes back to gross profit.
Right.
Anyway.
Yeah. No need to be overly complicated.
Yeah.
When there's one number you can point to and everybody understands it.
Everything revolves around that.
Yeah. I think you beat me to the question, but I'll ask it anyhow. One of my favorite things that we do in the podcast here is ask, if you were to describe your leadership, could be style, could be, role, what would it be? And I think you said leader of accountability, as I mentioned to you, for me, it's connector.
Right.
That kind of describes the way perfect. I look at my role. When somebody needs something, I'm trying to think at a higher level, who do I need to connect them with to service that?
Yeah. And it's it's probably unfair to ask everybody to use one word. So I'll just use, like, I'm a leader of accountability. I'm a leader who looks at merit to promote people and give people more money. Nothing I do is not without a deliberate thought. Decisions in the business are always made with financial information. And then maybe the last part to round it out is I'm a direct leader because I'm a direct communicator, but that also means that when we're trying to do something as a company, put all the people on the email or put all the people in the meeting or on the phone call who need to know. My wife jokes with me, I'm what they call a low touch communicator. When we have a conversation or I send you an email, there is zero ambiguity about what I want you to do.
Right.
High touch communicators are asking, what do you think? And they're inferring, and then maybe there's another meeting. I don't operate like that because in a for-profit business where I've got, at some points over the last 6 years, you got 120 people that you got to make sure payroll gets run correctly and there's enough money in the bank account. I don't have time for all that stuff. Yeah. So I'm a direct communicator who operates under merit and accountability.
One thing, I've known you for a long time, so I didn't have to do research to do this, but I did actually go do a couple minutes of research to see if I'd find anything interesting. And there's a article on Navy Athletics website still from 2001 after you had received numerous awards for that season, but I think you were named like either the Navy Athlete of the Year or the Navy Athlete of the Year for that sport or something to that degree. And there was a handful of quotes in there. And one that caught my attention because I know Matt Hogan really well. Yeah. I'll paraphrase his quote, but it was effectively, a lot of people are going to miss the production of Adam on the playing field and what he did for us as a player. But really what I'm going to miss about Adam graduating is his ability to teach and mentor the younger guys on the team. Is that something you still feel like is a big part of what you do? Yeah, mentorship, or I think in some of your experience in the search fund world that you participated in a little bit, I'm sure that was some of that.
Yeah, I don't put mentorship at the top of my list about hours of my day or my week. But what I do enjoy doing, and you remember quotes when somebody has something really nice to say, Matt said that they will miss, I don't know if he used the word mentorship, they'll miss Adam's work ethic in the example he sets. And what he meant was, like, At the time I had a very good season. It was nice to have the accolades, but I was the hardest working guy on the team.
Yeah.
I ran the fastest mile and a half. I shot the most amount of lacrosse balls. I did the most amount of work off the field physically. And when I worked in my previous role for the private equity, the turnaround firm, first thing that guy said to me was, the harder I work, the luckier I get. And I'm not like in a position in my life where I'm grinding anymore necessarily, Justin, but I do think that I'll make a point is when we go into meetings and I talk to my teams, I want them to be an expert in what we're talking about. Because when I'm talking about the things that I'm involved with, I know everything. I've got every single piece of information on my computer in my head. The meeting I have with the landlord, the meeting I have with the customer, I have every single thing because information is power. And I first learned that on the submarine because you're a 25-year-old junior officer and you're dealing with all these older, chiefs and senior enlisted people. And first thing I learned is knowledge is power. So you have to educate yourself. And it took me a long time to educate myself. But the more I worked in financial statements, worked in financial systems, I finally got to the point where like I could build them from scratch. I can just consume a lot of information, mostly numbers, not words necessarily. But I think that it's not really the example you set. I think it's about the knowledge. And for the knowledge on the lacrosse field, it was like the work ethic. It's you have the best shot on the team. It's like, how did that happen? I'm like, 10,000 hours.
Wow. A mutual friend of ours, or at least acquaintance of yours, but very good friend of mine, Tillman Johnson, was not like the most rah-rah leader on the lacrosse field, but he just outworked everybody. And that's
Totally.
a goalie. And that
I know.
And he was a captain. And so I could definitely get that. All right. We could sit here. We could probably talk for 2 more hours and get into some really interesting stuff. And maybe we'll come back and do it a second time. But I've got some kind of quick hitters that I'd like to roll through here as we were finishing up. And this is kind of goes to the Twitter X world of what do people do to build their business? What's your morning routine look like? Because I know you're hard, not just hardworking in your profession, but you're in great shape, eat well, sleep well, do a lot of that kind of stuff. Yeah. Tell us a little bit about your morning and daily routine.
Yeah, I think the theme of my personal and professional life is moderation. I try to do everything. I try to do a little bit of all the things I do in my life every day. I'm not a strict routine person. I don't do the same things every single day at the same time, but I do a lot of the same things every single day at the same time. I always get up and I always I don't drink coffee. I drink 1 shot of espresso. I drink a latte. That's the first thing I do when I get up after probably going to the bathroom. And I'm typically up before my kids. My wife is usually up before me about the same time. And after I do that, the very first thing I do is open my computer and go into my bank account of my businesses. And I check cash and I see what checks have cleared. Every single day.
Priorities are with the business, right?
5 days a week, and even Saturdays usually because the bank account lingers. I look at my bank account every single day because every decision I make is based on how much cash I have in the bank account.
Yeah.
And maybe that's my distressed business days, but those are the things I do. Then the kids get up, breakfast, getting them ready for school. I typically take the kids to school every day. My wife has a corporate job. She drives to Baltimore. She does the pickups. And once I drop the kids off, I typically go get breakfast. I come home and then I'm either up at my office 2 days a week, which is, as you know, near the airport, or I'm home on my computer. But like when I work out, where I work out, I don't do anything the same thing. I don't like Mondays are kind of my days to go out paddleboarding, but I don't do it every Monday. When do I go to the pool? When do I do yoga? Like when do I grocery shop? And it kind of happens similarly every day.
You control your own schedule.
Yeah. And I think because I control my own schedule, I don't have to be as regimented, but I'm not like, I don't get up at 5 o'clock and read the newspaper. I read the newspaper, like I'll probably read the newspaper when I get home.
Right.
I glance the Wall Street Journal every morning. I look at the bank accounts. I'm in my financial statements and my financial system almost daily. If I'm not in my office, I talk to my controller, who's the same person for both businesses, probably 3 or 4 times a day. And I talk to the GMs of the businesses at least once a day.
My read on that explanation is that you've got such personal discipline that you don't have to implement personal discipline. What I mean by that is I'm probably very different than that. Like for me, regimen, routine, trying to get a workout in before 6 a.m. as many days a week as possible is absolutely important because my discipline will wane as the day goes on. Right. You've got such personal discipline that it doesn't have to be at the same time every day.
Matt Hogan said it. I think people were surprised that I came from Calvert Hall and I was getting recruited at a lot of, it was really besides the Naval Academy, a lot of good schools because it wasn't West Point, it wasn't Air Force, it was Navy or all these other schools. And everyone's like, oh, Adam, and Matt's like, this is like one of the most disciplined high school kids I've seen.
Yeah.
Naval Academy will give him more,
yeah.
But I never let all the noise bother me, what other people are doing, what they're saying. I've always been laser focused on accomplishments and being results driven. And I had the confidence in myself, the way that I was doing it. I just keep doing it like that.
This would be a silly question to ask now, is like, what keeps you motivated? I don't think you need motivation, is my guess. Like, this is who you are. You get up every day and you do it, right?
Yeah, I'm obviously most motivated by having the flexibility to spend time with my family.
Then let me get from the motivation question to how will you define success going forward? You've got many years of working left, or maybe you don't if you choose to sell a business at some time, but how would you define success going forward now?
I'll steal it from the poster in my chiropractor's office. It says success, and it gives a definition. It says doing what you want, when you want it, with who you want, and how you want it. That's success. And is there financial components to that? Yes. Is there control of your schedule components? Yes. Is it having enriched personal and professional relationship? Yes. But time for me was the number one driver to leave my firm and be on my own. And I've had a couple partners. They haven't really worked out. I think I have great relationships with vendors, and a lot of them, actually, that's not true. Some of them are really good friends like you. But I find that the more people I have to deal with, the less my time I have. Yeah. So I've just decided not to have them.
Well, with that, I'll say thank you, because you chose to be here, which means a lot to me, and hopefully means that this was something you wanted to do. I enjoyed the conversation. Yeah, I don't know if you've got any final thoughts here, if you want to tell people how they can pay attention to your business going forward, if you want to quietly step away and we could call it a day.
No, I mean, back to the motivation thing, I'm motivated by staying independent. I'm motivated by having a financial dynamic to where, like, my wife and my kids can have great lives, because I don't know another way to do it. That's what I had growing up. And I found that people who own their own businesses, although it can be stressful at times and it's not good every year, but it's good most of the time, those like operating dynamics for me make the most amount of my time. And a term I always use is I'm getting the highest return on my time.
Yeah. Well, with that, appreciate your time here today. We may have to come back and do this again where we can dig into some more details.
Sounds good.
Been a good day.
Thanks for having me.
Yeah, absolutely.
Thanks for tuning in to Coffee Talk with Justin Mullen. Topics on leadership, culture, CRE, brought to you by Hyatt Commercial. Until next time.